Hi, and welcome to another weekly recap. So, today this is the second week of March, and here you can see this is the second week. I didn't trade on Monday, but I showed up to the market on the next 4 days, and there is nothing pretty much to say about the market on this week. It was a very consolidated, range bound market, but on CPI, I got a trade, and that ended up being a break even trade. So, yeah, let's discuss this in detail, all the trades. So let's jump into the charts. Let's jump into the whiteboard and see what happened on this week. So starting off on March 11. So in GU, this is the daily time frame, and you can see that the swing structure is bullish. The external range liquidity has been taken out, so we can expect some pullback, so mitigating the EQ of the swing range, but still the pullback hasn't started. So what I can do, I can just look for longs, or I can wait for a strong shift in the lower time frames, and I can look to play the daily swing pullback. So this is the 4 hour chart, which has some kind of extra candles to give us more information. So the swing structure of the H4 is also bullish, and here you can see that perfect equal highs have been created for the market to trap the buyers. I mean, trap the sellers. These kind of thing are like pattern, triple top. And next time the price reaches here, there would be sellers because they will be drawing some resistance lines here. So once all the early sellers sell, market pushes up and take all the stop losses above and then start to push down. So that's the typical liquidity trap. But nowadays, market has evolved so much, so we can't say that this is going to happen exactly. So just play the price action. That's it. So from the 4 hour perspective, also I can expect the price to go further up. Why? Because there is this buy side liquidity and there is this demand zone. And this demand zone has beautiful sell side liquidity being set up. So once the price reaches this demand, I'll be looking for the price to chop bullish, and then I can look for this fresh demand to look for buys. So until then, I'm not getting involved in that. So coming on to the H1, H1 is also the swing structure is also bullish. The swing low has just been liquidated, and then the price started to push up. So I can expect a deeper push up because the strong swing low has been liquidated. So probably this could be the POI which the price can respect and then push the price further down if the price wants to mitigate this 4 hour demand zone. If not, price can use this liquidity to take out the buy side liquidity above and also boss bullish. Continue the um, let me clear out this one. Yeah. Price actually liquidate this low, so it can boss bullish and continue the H1 swing structure. So this is the H1 swing structure. We can continue this swing structure. So yeah, moving on. So those were the pre-session analysis. So these are the session updates. So as expected, price after taking the sell side liquidity started to push up. So now whether the price reacts from this demand, reacts from the supply, it pushes further down, or flips this demand, flips the supply and takes out the highs is a question mark. So I was not interested know, in getting involved because two things can happen at this point of time. So the best thing is to wait for medium time frame confirmation before getting involved. So what happened next? Price flip this supply and then boss bullish. So this liquidity probably was enough for the price to push the price further up, and this demand was not mitigated. Yeah, it is what it is. Like sometimes it doesn't always mean that your supply and demand should be mitigated. It is what it is. Yeah. And yeah, price took the internal range liquidity, but it failed to take out the external range liquidity. So what I expected is a strong push up, taking all the price and liquidity above, but the price just liquidated the external range liquidity and it started to consolidate. So this is actually the 4 hour chart. This is actually a 4 hour chart. If I zoom into the H1, it would be much more clear. So here you can see, I thought the H1 was pause bullish, but it just wicked it. It was just a week. You can see it was just a week and a strong retrace down. So yeah, I can look place shorts for mitigate this in this low, fail to take out this high, which means this low can be weak. And if the price talks bearish, I can look to place shorts. But the session got over, and I didn't get any trades on this day. So since the market is ranging, I didn't do any next day analysis. So I just left the desk and waited for the next day to come, and then with a fresh mind, I can do the analysis. So this is what happened on March 11th. So coming on to March 12th, where I got the break-even trade. This is where the CPI stuck at 6 p.m. So 6 p.m. is IST, Indian Standard Time. So if you convert that into GMT plus one, so that would be 12:30 p.m. GMT plus one. So yeah, moving on what happened on March 12th. Let's see what happened on. So same thing. The daily, the swing structure is bullish, and there is not nothing much from these tiny candles. So I just look for the 4 hour chart for much more detail. So here you go, the 4 hour chart. Yeah, price took the internal bank liquidity and made an internal pause bullish. So since the price has made an internal pause bullish, although this is the huge swing range, so expecting a strong shift down and then push up, it's not next to impossibility. But yes, sometimes it can happen. But sometimes even this internal range liquidity is sufficient for the price to keep pushing the price further up. So I'll wait for one more leg up. If this low holds, then this would be my swing high. I mean, H1 was bullish. Until then, I'll keep this as my H4 was bullish, and this as my H4 internal was bullish, and then continue to play the internal bullish order flow. So, yeah, since the internal structure is bullish, I am waiting for the price to mitigate this demand zone and then continue this bullish order flow, taking out this weak internal high. So that's what the expectation for the day. But at the same time, expecting the price to mitigate this demand zone also means that we can place shorts targeting this demand zone. So that was also in my mind, and also the price did not reach the EQ, and this supply was very much high probability for me. Why? It had inducement, it had made a strong imbalance downside, and also it had flipped this demand zone. So it's a strong supply, so I can look for shorts from this one, from this POI, and it's also in the premium. So it's also in the premium. So price can mitigate this supply and then push the price down and mitigate this demand zone. So that's one chance of a price action being playing out. Sometimes, not always what you think expect, not your expectation always plays out, but you must be alert to adapt to the market. So once the price reaches the equilibrium, shorts become l- less probability, less probable. So you must shift, you must reanalyze your market and see what happened to the market. So why did it shock bullish and what it was reacting from. So it was not reacting from a valid demand zone, but it reached the discount and it shocked bullish. So this pattern, you price is bullish and pullback is over and then the price stock bullish. So this indicates that this high could be weak and this high can be taken off. So this POI is valid because it's not liquidity stock bullish. So I'm waiting for the price to mitigate this demand zone and then look for shorts targeting this high. Concept is very easy. So yeah, uh, initially I expected the price to take out this lid. So if the price had taken out this lid, then that would be very much high probability for me. But just price just mitigated the demand zone and then push the price up. So all I can do is I can look for confirmation entry. So from here to here, this is the 618 point. So if the price mitigates the 618 level, I'll be placing my stop order. I'll be using that as my mitigation candle and be placing a sell stop order, buy stop order above the candle. So that actually happened, and I placed. This was the mitigation candle. Actually, it actually mitigated this uh, 618, but now currently I just took the screenshots just now, so it is not aligned. Actually, it mitigated the 618. I placed my sell stop just above and stop with one pip displacement buffer and one pip stop loss buffer. So the stop loss turned out to be around 15.3 pips, and price reached almost my TP. So this was my 2.5 hour in 2.6 hour TP. So price reached around 2.45, I think, probably 2.45, and then it got hit since the week is bit. This week was bit range bound, so the demand was not able to step in and create some impact in the market. It was immediately overtaken by the supply. and the price pushed down. So as you already know, like once the price reaches 61.8% of this entire range, I'll be taking my stop loss to equilibrium. I mean, just above equilibrium, just to get some benefit, just to neutralize the commissions by the broker. So that's why I got the $10. So yeah, at the session update, I mean at the end of the session, so price actually made was bullish here, and first it was a week. So with this strong rejection, I thought the supply would be stepping into the market, and I waited for the price to chalk bearish. And this was my large PY. I waited for some kind of LC2A or LC2B model. But when you reanalyze, then you saw that okay, H1 actually was bullish. So I must continue to look for longs. But that's a thing for the next day. So what happened on next day? Let's see. So March 13, 2025. So here, same thing. The daily, there is not much of information. So let's pass on to the 4-hour chart. Here in the 4-hour chart, clearly again, the H4 had internal was bullish. So again, a demand has been formed. So this demand is an H1 demand, so a refined version of H4. So price can mitigate this demand and then continue that internal bullish order. So if you see it from a zoomed out perspective, you can see a trend line liquidity has been created. Anytime, anytime, price can liquidate all this trend line liquidity and then mitigate this equilibrium and then start to push up. Anytime that's possible. Until then, I'm happy to look for longs from the valid demand zones. So here again, it's one was bullish. We saw that yesterday, and this was a valid demand. For this demand, this is the extreme. I mean, this is the swing low. So this is the swing low. So this demand has been mitigated. So this is the valid demand. So if the price wants, if this low wants to hold and this demand has to hold, so but I'm not interested in taking longs directly because this demand was formed yesterday. So I'm happy to take LC1s on the demands that day that formed on that day. Suppose if this demand was formed today, then I would have taken trades using LC1 models or LC2A models. Since this was formed yesterday, so ideally I would be waiting for an H1 to chalk bullish, fresh PY and look for trades. But since I adjusted my strategy a bit, now I'm a bit aggressive. I'll be looking for direct LC2A models from this PY because it makes sense, right? This is a lost demand if the price want if this low wants to hold. Otherwise, this is a valid good losing trade if this low goes out. So yeah. And what happened? Price mitigated this demand and actually chalked bullish. So this reaction was very strong. I didn't get any entries, and with the same path, you know, price took out invalidated this demand. So most probably this low would be taken out. Initially, I thought, okay, price mitigated the equilibrium, chalk bullish. So again, the same pattern can appear and this low becomes weak, and I can look for longs. By the time this candle finished printing, the next candle took out its lows and invalidated this demand, and it's not a valid trade anymore. Clearly, the price is range bound. You can see the price is range bound, so there is nothing much for me to analyze or get involved. Okay, let's jump into the last day of this week. So again, same thing, daily, no information. So let's pass on to H4. Here on H4, this was the H4 internal, strong internal low, but this was very weak. You can see how the weak was formed. But one thing that made me to keep this low, identify this low as a strong internal low is it swept some sell side liquidity and pushed up. So that's the only reason that I am considering this as a strong low. So moving on to the H1. Here you can see that I didn't do the H1. I did actually the H1 analysis, but failed to paste it here. But this is almost the H1 pre-session analysis. So it's just 826 GMT plus one. So here you can see the price at soft bearish. So which means this high still holds. Price. You can see the price made this one and it's soft bearish, which means this low is weak and price can take out this low. So that was my target initially. So this was Uh, this is actually the 7 a.m. candle. So I expected a tiny pullback, and I was expecting an early trade today during the Frankfurt itself. But unfortunately, immediately after the Asia close, price mitigated this demand, this supply, and there was a huge gap down, and this was the Frankfurt open candle. This was the 7 a.m. candle, and price swept the sell side liquidity. Uh, I told you this was the week low, and this week low was taken. So now what's the target? I literally don't know. So I'll be, yeah, here you can see this supply is the inflection point. So here two things can happen. One is price can respect this POI and push the price down, make making a H1 boss bearish, or price can flip this supply and continue going up and continue making the H1 boss bullish. So both the scenarios are possible. So at this point of time, I'm not interested to trade. I'm just interested to sit back and watch what the price is doing, and according to that, I'll look to trade. So that was my plan. So price chalk bullish. So yeah, and also it swept some sell side liquidity. Previously, you can see that it actually swept the sell side liquidity, and now it had chalked bullish. So high time to get for longs, but but suddenly I just saw something like there were tiny micro equal lows which the price could liquidate, but with this strong bullish momentum, I can count upon this one and I can look for buys. So these all these low resistant liquidity can be taken out, and price can eventually take out the weak swing patterns. So that was my plan. And yeah, price stock bullish and again price stock bearish. It was bit consolidative, and by the time this was the 3 a.m. candle probably. This was the 3 p.m. candle. So that is the end of the session candle. So at that point of time, there is nothing much to do. Uh, and the only thing that I noticed was H1 was bearish. And I think that H1 did not was bearish because it just liquidated the strong lows. So that's the end of the week, and there is nothing much to say. So if the price was chalk bullish, then I can look for longs targeting this week high. Or if the price mitigates this demand zone, then I'll be more conservative. I'll wait for a chalk bullish to look for longs, or I'll wait for this demand to get flipped to look for shorts playing the daily swing pullback. Remember, we are uh, uh, this was bullish. I mean, I'm expecting the H1 to was bearish because of the daily structure. In daily, we are yet to make a swing pullback, which is same as that of the 4-hour chart also. In 4 hour also, we are yet to make a swing pullback. That's why I'm expecting H1 to was bearish. Otherwise, I'll just stick with the H1 was bullish and then look for longs. So yeah, probably next week I can expect the price to show some real momentum. So the daily can start its pullback probably. So this is the expectation for the next week coming up. Yeah, let's see what happens on next week. I'll be coming up with the same weekly recap the next week also. Until then, signing off from you. Cheers, guys. Bye.
Free audio post production by alphonic.com.